folks. This is your boy Brick. Welcome to Crypto Gold Fusion, where digital innovation meets time edge value. Every day, we break down Bitcoin, gold, altcoins, and technical, fundamental macroeconomics analysis to key market forces shaping your trades. So hit that like, subscribe, and let's get to work. So let's get started. First, we're diving straight into the Bitcoin chart, because right now, it's chaos out there. As you can observe, Iran-Israel war escalation has sent shockwaves through the market. And as you can guess, traders got wrecked. Liquidations spiked, volatility surged, and if you were over-leveraged, well, you felt it. But it's not just traders. Altcoin holders are feeling the pain too. Those who've been holding on through thick and thin are getting dragged through another roller coaster ride. And it's not over yet. As you can see, the Bitcoin is currently trading around $101,000, $91 down 1.3% intraday, with a range between $98,125 and $102,000. The price action shows a descending channel consolidation following April. May's rally off $109K highs. Support zones. Immediate support at $100K, next at $98K, with a deeper level near $92,000 to $95,000. Resistance targets. 15K to 106K zone, upper channel boundary, next at 108K, and if the hype breakout happens, the potential is up to $112,000, which is currently I'm not seeing. Currently, in this case, I'm observing the potential breakdown at $95,000 demand level due to the current macroeconomics and war situation between the countries Iran and Israel and the US attack. And the worst case scenario, I'm seeing Bitcoin would potentially down to $75,000 demand zone, which can be done realistically due to the tension. And as you can see, Bitcoin was staying at its all-time high from too long and down while taking the tensions along. So I suggest you to trade carefully, take low leverages, and DCA according to your strategy. But don't trade blaving or you'll get the roller coaster ride. In the long term, I'm seeing the great dump because trading is all about psychology. And the journey of 2025 isn't too good as we expected, but you can rely on safe haven gold. People are afraid of loss, so they put out all the money from the digital and go for the gold in long run always. You can verify history and can see the altcoins. Well, trade fundamentally, watch every news, and take your decision precisely before jumping in. And the technical analysis on which I don't mostly rely. But we must check it. We can't rely 100%, because if it's saying it'll go to the moon, $150,000 Bitcoin and the war started, tensions arise between countries, or FOMC cuts the rates, your $150,000 could be $15,000. Haha, just joking, but be careful. RSI currently sits in the low 60s bulls, have a slight edge. We're seeing strength, but no FOMO yet. A clean push above 70, that's where the real breakout pressure kicks in. But here's the catch. The fundamentals are painting a very different picture. From rising geopolitical tensions to shaky macro sentiment and reduced liquidity, the financial backdrop isn't exactly risk-on. So while the chart says momentum's building, the global money flow is still cautious, maybe even defensive. That divergence between technicals and fundamentals, that's where smart traders pay attention. The patterns and structure of the price is forming a bull flag pennant in the descending channel, usually a configuration signal if support holds above 100K and the potential head and shoulders pattern seen in some timeframes. Could trigger a drop towards 90K if it breaks down. Be smart, fast, and stay ahead and aware of the dump. Quarter point. Now let's talk fundamentals. Because while the charts might be heating up, the global stage is downright volatile. The recent attack on Iranian nuclear sites sent Brent crude spiking 3 to 6%, with Iran threatening to block the Strait of Hormuz, a choke point for global oil flow. Tankers are already rerouting, signaling real disruption fears, and oil traders are watching this like hawks. Higher oil, higher inflation, and that throws a wrench into the central bank playbook. If U.S. inflation picks up again, the odds of rate cuts shrinking fast, and then came the wild card. Trump's airstrike orders and his now infamous evacuate Tehran comment. That's not just rhetoric. It sent volatility surging across oil, gold, FX, and equity markets. his Operation Midnight Hammer, is more than a headline. It's the U.S. signaling control over the conflict narrative, and that moves markets. Now, even as oil spikes, Iran's energy infrastructure is strained, rolling blackouts, grid pressure, limiting their long-term leverage in oil politics. So what we're seeing is a short-term geopolitical inflation shock, but one that could have lasting ripple effects across inflation, interest rates, and ultimately crypto.
And here's the advice I'll leave you with. In markets like these, it's not about being the fastest. It's about being the smartest.
Use your brain, not your emotions. Trade with a plan, not with hope. Fundamentals, technicals, and psychology all matter. And remember, capital protection is your first strategy, always. That wraps up today's Crypto Gold Fusion update. Got a chart request? Drop it in the comments. We always check in. Don't forget to like, subscribe, and tap the bell so you never miss real market insights. And also, don't forget to join our Telegram channel, link in the description, for real-time updates, trade ideas, and smart discussions with the community. Thanks for riding with us. And remember, whether it's blockchain or bullion, fusion is the future. Good luck.